Hello and welcome to another episode of the Property Investors Handbook Podcast. I'm Adam Bell, and today, again in the studio, I've got Tony Sutherland joining us as we explore the intricacies of the cash rental market, including renting out rooms, granny flats, and properties on platforms like Airbnb. We're going to discuss the tax obligations associated with these types of rentals and why the ATO is paying close attention to them. Tony, welcome back to the podcast.
Thanks, Adam. Thanks for having me.
Excellent. All right. Can you start by explaining the tax obligations for property owners who receive cash rent for, rooms or granny flats?
Yeah, thank you. Look, everyone has a perception of what is, am I renting? Is it income? That sort of thing. Is this just a little side gig for me? We've spoken about a normal rental property.
Sure.
Done through a property manager, and that's pretty straightforward.
Yeah, and it's bank transfers.
Exactly.
Yep.
And it's bank transfers. The property manager's keeping all the records for them of the money in, the money out, that sort of stuff.
Which, best way to go.
Best way to go. Good record keeping.
Sure.
But look, there's a growing industry out there of people renting out granny flats because, as we see, particularly the state governments are encouraging people now to put in granny flats to help ease the housing crisis and things like that. So that's happening more and more. There's people renting out rooms, spare rooms in their house just to help with the cost of living.
That's it.
And of course, obviously, there's a lot of people moving into that short-term rental market through platforms like Airbnb. So yeah, it's a growing industry, and a lot of the times the granny flats, the room rentals, the things like that are done in a cash transaction. And some people think, well, that's just a little bit of pocket money.
Extra cash.
It's not, but that's different from the way the ATO views it.
Right. So this cash, it obviously has to be reported. So how does one do that when there is no actual, on paper record?
Exactly. Well, again, it's back to that record keeping.
You need to put it down. You need to have a spreadsheet.
Yeah.
You need to.
Exactly. So you got to understand that the ATO view it just like any other rental property. If you're receiving $200-300 a week for renting out a room in your house, that's rental. Yes, you're allowed to claim a portion of the expenses against that, but it's all about the record keeping, and it's all about the ATO making you or wanting you to declare that in your tax return each year.
Sure.
So it's how you're going to keep the records for that.
Yep.
So
So here's probably a bit of a slightly difficult question. How do the ATO track it? How do they know?
Okay.
Are we just going to simply get down to this is an honesty system and,
Yeah, well, all tax returns at this stage are self-assessment, so it's sort of like an honesty system.
Anyway. Yep.
But the thing is, the ATO are growing their data matching capabilities, so they're starting to track it because they don't believe everyone's being honest, and that's probably true to a certain extent. So from the easiest point of view, things like anyone who's renting through Airbnb, that's easy for the ATO because Airbnb are required to supply the ATO everyone's annual data,
Right.
rental incomes and commissions paid and things like
Sure.
that. So the ATO get that every year. They load it in, they match it against everyone's tax return.
Sure.
It gets a little bit more difficult if someone's renting a granny flat or a room, and particularly if that's in cash.
Yep.
But then the first thing most people do is put it in the bank or have the tenant put it into their bank account. The ATO have got access to that.
Yep.
And I think we've spoken previously about the technology. The ATO they have data recognition, so they control your bank statements,
Data
see all
matching.
these cash
Yep.
deposits,
Go,
and
what's this?
and say that doesn't match up with your salary, and then start asking questions.
Can you explain, is there any difference in the tax treatment between traditional rentals and, short-term accommodation like?
From an income and expenses point of view, no, there's not a lot of difference. So if you're renting, let's say, part of your house through Airbnb, which many people do, versus just anyone renting to a friend, renting a room out, it's the same. That's income you're receiving. but you're entitled to claim the relevant proportion of costs in running that. Obviously, things like cleaning, a proportion of your home rates and insurance, body corporate if you have it.
Yep.
You can apportion those appropriately
Sure.
against that income.
Well, that was actually my next question. If you are renting a room or a granny flat, what are the expenses that you can claim? So you've covered a few there. Let's go through them.
Yeah, look, it's the same as a normal rental property.
Right.
So whatever you're outlaying to run that house,
Yep.
if, let's say, a portion of that house, let's say it's a third of the house is rented out,
Yep.
then generally a third of the property expenses, like rates, insurance, body corporate, can be apportioned and claimed.
Right.
If there's specific cost to that rental part of the house, be it painting, carpet,
Yep.
those repairs and maintenance, they're directly attributable to that rental income.
Sure. How do you work out the portion, the percentage? Let's just say it's one room in a 5-bedroom house, but that person is obviously, using a bathroom, they're using the kitchen,
Yep.
they're using the laundry. How do you work out what that percentage is?
Yeah, that's a good one. That's a very good question. It's generally a percentage of floor area. So obviously, if it's 1 bedroom, versus 4 bedrooms in the house,
Sure.
you calculate it on floor area. But if they have access and use of other parts of the house, like you say, kitchens, bathrooms, laundries, it's then apportioning, on a reasonable basis.
Right.
What that sort of usage
Okay.
and floor area is. Yes.
Okay. Other than keeping records of cash transactions or the rental income, how would owners go about recording keeping records for those types of expenses? Because I guess they wouldn't in their normal day-to-day, running of their if it was just their own house.
Yes. Yeah.
Again, it's just spreadsheets, things like that.
Yeah, look, the spreadsheet's the most simplest form. It's it's free, it's cheap. So
Yep.
if you're diligent enough to keep it in a spreadsheet form, there are some smaller software programs you can
Okay.
access
Yep.
for those sort of things at very little cost. But it still requires some input from that owner to
Sure.
record it. Particularly if they go down to Bunnings because they've got to buy something to fix that room or that rental part, making sure that they put that cash receipt into their record.
Sure.
Otherwise,
And look,
otherwise they're doing themselves a disservice by not having all the expenses they've outlaid.
Sure. And probably something we haven't covered here, but I'm guessing would be another key piece of advice for someone who's collecting a cash rent. And we said keep a record of it, have a spreadsheet and so forth, but actually writing out a written receipt and having a receipt book, the old school style,
The old school
carbon
style.
copy.
Exactly.
Yep.
Because generally on those sort of granny flat, room rental things, it's generally more of a handshake. There's no
lease or
residential lease agreement or anything like that. So the more records you can keep, the better you're positioned with the ATO if they're asking questions.
Sure.
If they can see you're a diligent record keeper, they're not going to bother you too much.
No.
Even if they come along and do ask questions.
Sure.
If you can produce the documents and the data there and then for them, they'll be very happy.
Sure.
If you can't, they'll go a bit deeper.
Sure. And that's probably my next question. What sort of common mistakes do, people in this area who are renting rooms, granny flats, with taking cash, mistakes they make that do draw attention to themselves from the ATO?
Well, we touched on that before. It's like they might be getting the cash, but then they're banking it. So then if they're not declaring it and that income or that cash doesn't tee up with their salaries going into their bank account or other forms of declarable income, the ATO can quickly identify that's from some other source, and that's when they ask questions.
Sure.
That's the biggest mistake people make. But I mean, whether you receive the cash and you put it in your pocket or you put it in your bank account, you got to remember the ATO, in their opinion, their laws, it's rental income you have to declare.
Yep, absolutely. So look, the key to all of this is record keeping, isn't it?
Absolutely.
You need to have that. Do not fall into the trap of thinking, I'm taking this, they'll never find out. This is just a little bit of extra on the side. It is income. It needs to be declared, and you need to keep records, because if they come knocking with that audit email that you get, and you've got no records, you're in a bit of strife.
Absolutely. Yeah. It's absolutely essential that you keep those good records, even if it's a cash transaction, because you have to answer the questions if you get asked.
Yep, absolutely. Look,
I would like to just finish that off is in that people also do have to understand if they're renting part of their home, their primary residence, be it rooms, be it a granny flat out the back, that will affect their future capital gains tax position and exemptions. And they should seek some very good advice on that before they go into that area, because it could have a fairly substantial capital gains tax impact down the track if ever they sell.
Okay, and that's with a granny flat as well?
Yes.
Okay, very, very important piece of advice. That's something I would never have even thought of. So make sure you talk to your accountant. Again, I do know a good one if anyone is looking. There may even be a website in the notes of this podcast. So look, thanks, Tony, for shedding light on this, the critical tax obligations for cash rentals, granny flats and Airbnb properties. So, to our listeners, understanding and adhering to these tax requirements is crucial to avoid penalties and ensure that your rental ventures are both profitable and compliant. So, look, for more detailed support and any sort of property management issues that you might have, please visit spmg.com.au. Stay informed, stay compliant, and join us next time on the Property Investors Handbook Podcast for more essential property management insights. Thanks once again, Tony, for coming in and joining us. Always love having a chat with you. You've got such great knowledge coming at it from a little bit of a different perspective, but one that's very crucial to all of our property investors who are listening out there.
Thanks, Adam. Appreciate it.